Could your business expense claim survive an IRS audit? Want to learn how to protect your business deductions from IRS scrutiny? You're in luck. That's what we're discussing in today's video. Also, if you want to learn how to move towards tax-free living, click the link in the description to sign up for my upcoming tax-free tax tactics talk. Discover legal ways to lower your tax bill in this must-attend webinar. See you there. Hey there, tax warriors. Welcome to JDB Tax. I'm Brian Eustache, enrolled agent and tax strategist. But I call myself a tax-tician leveraging the tax code to build your financial fortress. And with this segment of Tax Tactics, we're tackling a topic that trips up business owners all the time: substantiating your business expenses. Because if you don't have proper documentation, even legitimate expenses can be disallowed by the IRS. Let's get started. First, let's understand the general approach to business deductions. Deductions are a matter of legislative grace, meaning the burden of proof is on the taxpayer to show they're entitled to any claimed deductions. The IRS's determinations are presumed correct unless proven otherwise. So, with that kind of standard, how do you get deductions to get the green light? The answer is Code Section 162A. To substantiate a business expense, it must be ordinary and necessary, incurred during the taxable year, and for the purpose of carrying on a trade or business. Let's break these down. First, if you'd like to see more tax content like this, hit the like and comment down below. Back to ordinary and necessary, and where some people go overboard with things that are excessive and overly lavish. An expense is ordinary if it's common and accepted in your field. It's necessary if it's helpful and appropriate for your business. So, what could go wrong? Take Jason, for instance, who ran a mobile advertising business. He faced issues because his expenses didn't align with the modest income he generated. He only had $3,000 in income and tried to write off 130,000 miles in business miles. His income was made locally, but claimed miles driven throughout 30 states. In general, every deduction must be supported by records such as receipts, invoices, or logs. Back to Jason. A mileage log alone, for example, might not be sufficient without additional corroborative evidence. For example, the business purpose for those trips to other states, when he was really just a local business. The best practices is to promptly document and save or record the info needed for the deduction, because time can hurt your case. In the case of an audit, Mike, for instance, couldn't substantiate his truck expenses for his business because he waited years to document his trips. On the other hand, Mark successfully substantiated his vehicle expenses through meticulous record keeping, using an app to track business mileage. Putting documents together after the fact isn't a reliable source, and it won't hold up in an audit. What's the key takeaways? Keep detailed records for all business expenses. Use logs created at the same time as the event and corroborate with receipts when necessary. Note what the business purpose is and make sure it's not extravagant, excessive, or lavish. Remember, the burden of proof is on you, the taxpayer. When it's used correctly, Code Section 162A allows for anything ordinary and necessary for business to be a write-off. If you're unsure of what can be written off or how to properly document things like travel, meals, vehicles, and so many more categories, contact a tax strategist. Helping business owners take deductions the right way is just one of the ways JDB Tax Strategy helps business owners legally save money on taxes without fear of the IRS by leveraging the tax code to the fullest extent. After booking a consultation call with us at jdbtax.com, we'll build a personalized battle plan to minimize your tax burden and maximize your wealth. So subscribe, hit that notification bell, click all, join me on this epic quest to conquer taxes and claim your financial throne. I post tax tactics every Tuesday and Thursday. See you next time, tax warriors.